Hi, everyone. Thank you so much for joining us today. Welcome to yet another Lead Squared panel discussion. My name is Kartika. I'm from the marketing team and I will be your host for the day. Today, we are discussing a very important and a very exciting topic, ways to scale fintech revenue in the year 2023. And we have a panel of wonderful speakers here. Let me quickly introduce them. We have Ms. Nabi Mariam here, who is the CEO and founder at Cover Hero. Hi, Nabi. Thank you so much for joining us today. Really excited to hear from you and learn from you. We also have Mr. Shane Chanel, who is the CEO and co-founder of Yonder Money. Shane, thank you for joining us. Thank you for taking the time out of your busy schedule. We also have Mr. Brian Collins. Unfortunately, he's running a little late, so he should join us soon. He is the FinTech BDM at AWS. We're hoping to see Brian joining in any time now. And last but not the least, we also have Mr. Aditya Sharma. He is from Lead Squared. He is our business head for SMB accounts in the Oceania region. So once again, to all the speakers, thank you so much for joining us, and to audience as well. I just have a few pointers for you. Basically, since this is a live webinar, any questions that you might have, please put it up on the questions tab. It is towards the right side corner of your screen. Hi, Brian.
Hey,
Yes.
Brian.
All right, we have a full panel now. So,
So
yeah,
sorry,
yes,
everybody. I had a massive technical malfunction and my computer just completely broke down. So apologies.
Brian.
Thanks for having me.
I'm really glad you could make it then. All right, so I was just briefing the audience about the several options that they have. So yes, like I said, first the question tab. So any questions you have, please do put it up there. Our experts will take them up probably towards the end of the session. And of course, the chat tab is open for everyone to interact with each other. And we'll be publishing a couple of polls during the actual roundtable. So please do respond to them. We would love to hear from you. So with that, I'm just going to quickly pop to the back end. And yeah, I'm just going to hand the session over to Adi. Take it forward, please. Thank you.
Well, thanks, Kartika, and thanks again to Nabi, thanks Shane, and thanks Brian for joining in. And really looking forward to make this session a really insightful one for all the community members who've joined today, as well as our team here at Lead Squared. So quickly to start off, this session is primarily to discuss about growth, and the key driver of growth for any business, not just speaking about a fintech one, is an effective grip on consumer demand and an understanding of the target market. And the last decade and the last few years have significantly impacted both these factors, like consumer preferences, consumer spending has changed, is under pressure on some elements, and the market in general has evolved in terms of how consumers discover, and engage with products. So probably we'll start off with Nabi first to share her expertise and knowledge of how she goes about exploring the consumer preferences and how she plans her value offering of the product.
Thank you. Thanks, Aditya. Well, a little bit about Cover Hero and what we have in the market is, I think, quite helpful to understand what is the strategy that we've used in the last couple of years to get to where we are. So we have a no-code, low-code embedded insurance capability called Hustle Cover, which is designed to protect the income of self-employed people against accident and health issues, whether it is short-term, long-term, or even including death. So for a product like this, the way we distribute, so it's a product-led growth strategy, but at the end of the day, it's the end user that is going to purchase the product. So building a brand and building credibility about the brand was really critical. And when we first started, I did a couple of years in bootstrapping, and to reach markets or to reach the audience in a bootstrap kind of environment requires a totally different strategy compared to when you raise venture capital or any other sources of funding. So, and when we thought about building a brand and building a brand identity to connect with our audience, was how do we change the way we look at insurance? So a lot of thought went into brand and building that brand identity. The product is called Hustle Cover, and our hashtag is You Do You. So we wanted to have a lot of fun with it. we wanted to make sure that we didn't have to sell the product. It wasn't around, insurance is generally not something that people are interested in or excited to buy. So a lot of thought went into building that brand and running activation campaigns around hustle. And then getting in front of the customers was mainly through LinkedIn. So we did a whole range of speaking at a whole bunch of events, putting the brand out there, and then connecting with our audience. And especially the first year of the pandemic was quite interesting because a lot of the companies were like, okay, first year of pandemic, we really don't know what is going to happen. Hunker down and see if we can get through. And we were kind of just starting to fundraise. We just launched the product. And had got no traction and then went into lockdown. And then there was the 2 years of figuring it out. So it was very organic. And we went to market initially as a direct-to-consumer product. But during that time, we learned a lot of things around where we were going to distribute. So we didn't have an API at the time. But there was a lot of good customer sentiment that we got. And platforms started coming to us say, hey, do you guys have an API? We would love to integrate your product. And I didn't even think about, product-led growth at the time. We were very focused on direct-to-consumer. But during that time, because of the feedback that we got from customers, we started building our API in partnership with the initial platforms that came to us. So it was kind of cool and fun and a bit scary because we had to totally change the direction of what we thought the market wanted versus what the market said that they wanted. So that was kind of cool.
Amazing, and thanks, Nabi. And you've some wonderful points there on how to keep a consumer focus, keep the customer focus while planning your products and offerings. Over to Shane now. Would love to hear from your journey with Yonder Money on how Yonder plans to stand out on consumer preferences currently in the consumer demands, and what are your views on the current macroeconomic trends and how that would impact the overall sector and the market behaves for businesses like Yonder.
Yeah. So look on the macroeconomic side. Before I touch on that, just a little bit of perspective on Yonder. So we're classified as a neobank, if you will. So an everyday spend platform. So basically like a normal bank account with a card, for the ability to do international transactions. We also focus a lot on financial literacy, and I think that's something that we've noticed a lot within our application itself. We have put a pretty large focus on it, on the financial literacy tools and the PFM tools, and we've seen an increase of customers actually using those features within the app itself. Look, I mean, I could talk about macroeconomics all day, but it's interesting to see how consumers have been spending. We don't have years of data, but we are seeing that customers are spending a lot more at Coles, Woolies, so for international people. That's our big supermarket chains here. And look, we haven't been around for a long amount of time, so we only have the data that we've got over the last 8 months. But over that period, we've seen a bit of a shift away from discretionary spend towards a lot more of your staples, such as your groceries and your key essentials.
So being a part of the shifting consumer trends also implies that focusing on what are the basic requirements, what are the staples, and where the discretionary spend is heading, and being a part of those categories and payments for those categories would be important, specifically for payments businesses. Thanks for sharing that, Shane. And over to you, Brian. We'd like to understand your perspective from an enterprise customers profile. So like how do enterprise customers, how are their priorities changing in the current environment, and how does this what does this mean for your planning and for your outreach to these kind of consumers?
Yeah, thanks for the question, and thanks everybody for joining. So really quick, my name is Brian Collins. I run all of the fintech work across Oceania, so Australia, New Zealand, and the Pacific Islands for AWS, which sounds really impressive, except this is my first corporate role. I've only ever been in the fintech space. I've started four of my own fintechs. I've raised two fintech funds to above $150 million each. And so this is a bit of a different role for me, but what we're seeing as far as kind of macroeconomic plays and how it's affecting the enterprise space in regards to fintech is it's really interesting. So I think everybody's probably at this point across most of the major trends. We're seeing global valuations drop, but global valuations are really dropping because of a shift in the model that VCs and other investors are using when they model out their valuations. They're moving from a growth model to a unit economic model. Because of that, we're seeing more and more fintech switching to a B2B or a B2B2C model. And then that final kind of transition point is, so we're seeing that model shift, and that means they need new customers, and they're looking for enterprise customers, big corporates, and a variety of others. So one of the things that we're seeing, and I had a chat with one of the big four banks here earlier this week here in Australia. I'm talking to quite a bit of the larger enterprises. If you look at the macroeconomic trends, this is probably the best time since 2014 for large enterprises to work with fintechs, because you've got a lot of fintechs who have shifted their business models, who are starting to look at new opportunities. And because they're looking at new opportunities, they may have never worked with an enterprise before. They don't have any enterprise customers. So if I'm saying this, and this is you, just for the folks on the call, keep in mind that like you're going to need to make changes to your model. You need to go the extra mile when you get that first customer. Enterprises are aware of that, but the good news is, unlike 2014 when I was doing this back then, and I had my own startup at that point, unlike back then, a lot of enterprises have made changes to make selling into enterprises easier. They've created startup-specific contracts, startup-specific procurement. Many have kind of ventures-type labs or testing labs that they can work with. So it's never been a better time for fintechs and enterprises to work together. Unlike previously, they're in a better spot than they were in maybe 2014, the last time we saw similar market opportunities. But it's still hard. I mean, the average time to work with an enterprise business from a full sales cycle is still about 25 to 28 months. So you're still not looking at anything short. Now, there are ways to shorten that. We can talk about that in another conversation, or people can message me later. But you're still looking at a long lead time, which also means making sure your runway is really strong. You've got strong contracts and legal folks in place. You understand their procurement processes. I don't want to make this sound like it's easy, but if you're trying to move to an enterprise space and place, trying to work with larger corporations, they're interested. They're looking right now. They are active, very active in the space. And we see that in the M&A numbers, and we see that in the corporate deal numbers that are being shared globally. So the good news is, never been a better time. The bad news is it still takes a while, but there's ways to move that faster. So hopefully that answers the question.
Well, thanks, Brian. And I believe there are a lot of important points there on how to really stand out when you are trying to engage customers, what their priorities are, and what are the important key points strategically to align yourself with the consumers there, especially on the enterprise front. Thanks again, Brian. So with that, we move to the next. Yep. Over to you,
If you
Shane.
like, I'm happy to echo that point as well. So on that point, we added a couple of thousand customers in the first 6 months or so, and it was almost like bleeding blood out of rock, right? It was difficult. And you can only spend so much on digital before it gets dry, right? It's not easy getting consumer customers. So we've also done a pivot to B2B2C, and like Brian said, that there's a lot of institutions that are willing to chat and have those conversations with us. So yeah, look, I completely resonate on that. I also think digital marketing is going to be a much smaller part of our business moving forward in comparative to where we put our focus. Sorry, Kit.
Understood. And great point there, Shane. And thanks for echoing that. And it's a great segue into the next session of the discussion, where we are talking about the consumer touch points and channels that are important for a business to take hold of and understand and excel at. And I believe fintech in particular as a sector evolved really well. Once the digital technologies, they created a lot more touch points outside the, for example, the traditional bank branch visit or the traditional use of cash. Once the digital technology created a lot more avenues in which people can interact with currency, people can interact with services, can make payments or can make investments. That has really evolved once these channels came into play, and this is completely evolving. With each passing year now, for example, with the search environment, the search engine completely changing into a semantic based, a sentence based, a conversation based search interface with the advent of chat gpt, to earlier just a plain database search. So my next question would be around choosing the right channels. So and perhaps you can start with Nabi on how do you prioritize channels and what channels work in this new age market, and how does this category look like in the coming years?
I'm a big believer in the power of community as a channel, and building community takes a lot of time, and it's a long-term strategy. And you're not going to get the quick returns of throwing $1 million at Facebook ads or Google ads, that kind of thing. There's high churn. So from the beginning, our focus was building a value-aligned relationship with our potential customers, and it's a really it took us a long time, but we're starting to see some organic traction coming through. So we really focus on creating content and creating dialogue rather than, shouting at customers, engaging with customers. So we did a lot of Instagram lives with our partners. So they brought their community, we brought our community, and we created this, really fun, interesting conversations with like-minded platforms. So in our vertical, we are targeting sole traders and self-employed people, which is about 3 to 5 million Australians. And a lot of these people use these kinds of platforms. So content creators, platforms that have content creators. We did a lot of podcasts and webinars in terms of building community and providing value for this captured audience. Because our product gets distributed through these channels, we were like, how do we can run Facebook ads, we can do all of these things, but that's still one direct channel. And because we have an omni-channel distribution strategy, it was more about creating value for the user base of these existing communities and then tapping into it. The second thing was, then how do you build trust? Insurance is a serious business. When things go wrong, people want to know that, we've got your back. So there was a huge element into building a brand that's cool and funky, that looked like a lifestyle business, but also connecting with the pulse of the buyer of the product. So our channels is a combination of, we don't do a lot of like paid stuff, but a lot of activations around community building and really focusing on owned media and believing in the power of that owned media, which a lot of people might not have patience to do because you don't get quick returns on that. But I was hell bent on doing that, and now it's just like combination of what are the channels that are working. Our SEO is working really well. It took a very long time. We're currently looking at running a whole bunch of campaigns at the moment, just testing different types of copy. What we did during the pandemic and lockdown was very different to our strategy now. And to Brian's point earlier around the sales cycle, so because we integrate with these platforms, the product is not available for the end user because the dev teams can't prioritize the integration, or they have their stuff on their roadmap, and what we thought would happen got pushed back to like 3 to 6 months with the integration just not happening. So we're like, okay, we thought it was going to be super easy because it's low code, no code. You don't even have to like design a user interface on top of our APIs. It's like literally drag and drop. But that still took months. I was like, it's going to be done in a day. We can integrate in a day. Here's all the assets. It didn't happen in a day. So those are humbling experiences because engineering teams are weird, Engineering teams, they're like surgeons, they're dealing with engineering teams and the marketing teams and the revenue stuff. And I'm putting so much pressure, guys, we're going to get this going. And they're like going for this like perfection. And I'm like, we're running out of runway, let's go. So it was just inside the channels and inside our pipeline, we had to pick which ones are going to go faster. So instead of going after the big enterprise clients, we pushed them right to Q4. I'm like, let's go after the small ones that can integrate and get up and running. But on the spreadsheet, they don't look so exciting, right? So we have to be realistic around the challenges of a B2B2C product is getting 5 to 10 to 100 customers out of a 2,000 user base is way better for performance rather than waiting for a platform that has 100,000 customers, which is going to take months to integrate, and all the other challenges that has, nothing to do with actual channel. It has everything to do with all of the other elements of two teams being aligned and really prioritizing and being all in and committed to making that work.
Understood. And I think such important points about playing the long game. And for all the engineers and on the call, I hope that they're in significant numbers. It's all about like and to multiple teams. It's all about bringing teams together. With your vision and with your priorities. That's so important for any organization, and that's something that many organizations struggle with, especially at the start of the journey. And thanks for making these points, Nabi. So over to Shane now. You've talked about transitioning, adding the B2B2C play as well when you target customers. And again, like how do you go about getting engagement, getting those touch points, getting that share of mind with your target segment, and what's important for any such similar business to focus on when they are planning their journey to scale.
Yeah. Look, especially for fintechs, and similar situation in Abby, we're about money, right? And money involves a lot of trust. So you've got to look at your channels and you've got to say, okay, where are my leads coming from, right? What am I paying for? And a lot of founders may prioritize an onboarded customer, right? Or so sometimes if you've got a waiting list, like you might prioritize a wait list, but for us, what adds value to us, right? It's not just a lead. It's a customer that's signed up. It's a customer that's funded his account. It's a customer who's then transacted, and then a customer who's then transacted again this subsequent month, right? So especially when it comes to, yes, you can get a customer to sign up, but how do you get him to fund his account, right? Because he doesn't know who you are. You're a new product. You're a new team on the block. So I think for us, a few different channels have worked a little bit better, such as referrals, and as Nabi mentioned, that community base, right? Because again, that's circling back to referrals, right? If a friend is telling you about Yonder, there's already an element of trust allocated to that. But look, I think the other thing is, especially the engineers and the engineers in the audience. Look, yes, even I'm a bit of a perfectionist, and I want things to be, look nice, and I've really changed the way I look at things. Right now, I'm happy to just push something to the market, just get users to test it, and just give us a bit of feedback to see how they respond. Right, if they don't respond well, we'll trust. Like we won't spend the money on UI to improve it. We'll crush it. We'll just can it, right, or whatever the case may be. But also, like something I'm conscious of is just being in the trap of digital marketing is easy, right? You can just press a few buttons, hide behind a screen, and hope the customers come to you, right? But then you look at your CAC, and ultimately, you want transacting customers, right? You don't just want customers to download the app or whatever the case is. So I guess what I'm trying to say is, don't be scared of exploring the other channels that's a little bit harder. It's a little bit more complicated, because you might actually get firstly cheaper CAC, and you might get more engaged customers. I mean, we're using a few tools to basically assign and see where the leads are coming from, but we're not just looking at, again, not just them downloading the app. We're looking at who's actually onboarded and who's spending with us, right? And we would prefer to prioritize more money into those channels as opposed to a channel that might get us more customers. So I think, look, yeah, definitely have a look at alternative strategies as opposed to just digital, because digital is very difficult nowadays. Like, and the other thing that I think we've found is, as founders, we're we get so focused on the solution, right?
Mhm.
The products and the features.
Mhm.
Trust me, most people don't care about the products and features. I mean, yes,
Mhm.
they care, but
Mhm.
you got to tell them a story, right? You've got to be able to narrate it, but they've got to be able to feel it for themselves and feel warm and fuzzy inside. It's an emotional connection as much as a transactional connection, right?
Mhm. Great. I think some great points made there, and it reminds me of something that Brian Chesky of Airbnb said in the starting days in an interview to Reid Hoffman, that in the start, every founder or every company should do things that don't scale. And although it sounds counterintuitive, but it really pushes your system, the whole overall organization into really understanding what motivates consumers into picking your product or picking your value proposition, rather than throwing thousands of dollars of social media or any online ad network to quickly give you that short term adrenaline of hundreds of thousands of leads, which might distract your company into what really my value proposition and fitment is. And such good point made there. Thanks for making that chain. And something that you mentioned, probably I'll lead that on to Brian. uh, you know it's about connecting the dots for the customers in terms of the features and value propositions. And Brian, you're in AWS, you're a part of an really extensive horizontal solution that caters to so many verticals and has a paraphernalia of features and little bells and whistles that businesses can use. So how do you condense that complexity for any consumer, and how does in terms of your messaging, in terms of your outreach, in terms of engagement, how do you connect the dots or make that story for the consumer or the customer to understand what the value can be derived?
So I'll probably take that in two different ways. And first, I want to come back to something that Shane said, and actually Nabi was hinting at in her chat as well.
Hmm.
The solution is important. There's an old saying in startups. This isn't just a fintech saying, and this is not my phrase. I don't know who came up with this, but falling in love. If you fall in love with your solution, then you're falling in love with just one aspect of the business, and you're never going to change off that. But if you fall in love with the problem, the solution doesn't matter, and your solution is going to change over and over and over again as you build that out. And I think that's really important. I won't speak to all of AWS. I'm going to kind of just speak to my role and everything else. I think most people know that AWS is a culture of working backwards, a culture of really staying customer obsessed. It's one of the reasons that I've worked with AWS either as a customer, a client, or a partner since 2014, because it's extremely customer obsessed and customer focused business. And that's really what our focus is. And so, again, I won't speak to all of AWS, but on the fintech side, we recognize that there was a big opportunity in fintech early on. And while there wasn't necessarily a dedicated team towards it, many people in the startup space started putting extra effort into that fintech area. Starting around 2019 or 2020, I don't remember the exact date off the top of my head, we actually started hiring up specialized roles like mine, people who are subject matter experts in fintech, so that we could deeply understand the problems that people had. So I'm about 6 months into the role. I spent the first 3 months talking to as many fintech founders that I could. I ended up speaking to about 40 and asking them one simple question: what's keeping you up at night? And fintech founders are my customer, and if I understand what's keeping them up at night, then I can build a series of things around them. And there's a portion of that that's technical, but there's also just a portion of that that's a huge portion of that is non-technical. So I learned things like from that survey that I ran and the customers I talked to, 88% of all the fintech founders that I spoke to, cybersecurity was the top of their mind. 56% told me that fintechs that they want to be doing more business with fintechs, either making fintechs their customers or partnering with more fintechs as well. And there was a variety of other information that was really interesting. And so I think, regardless of the role that you're in, keeping customer obsessed and knowing who your customer is, asking them questions, never making assumptions about what you're doing, that's going to lead you to success. That's what I've seen in all of my previous businesses. That's what I've tried to bring to AWS. And AWS, of course, has a culture already built into that about being customer obsessed and being customer focused. And I think that's really important, regardless of if you're an engineer or a founder or an investor or whomever. And I'm going to circle this all back to what I started with, which is you can fall in love with a solution, you're going to fall in love with one thing. If you fall in love with a problem, you're going to fall in love with a whole group of people who have the same thing as you. And I think the best solutions and the best founders and the best businesses are the ones who fall in love with a problem and are actively trying to solve that problem.
Amazing, Brian, and some great guidance there. So let the problem guide you in the start, and you so rightly said the solutions will keep changing in terms of the context, of how you're solving the problem, who you're solving the problem for, and when you're solving the problem. So, for example, the solution to just making payments, in another country, might have a completely different solution 20 years ago. It has a completely different solution now, and probably 20 years from now, some blockchain driven technology would completely change the way we move currency around between different countries. So solutions keeps changing, but the problems, let them be your north star.
And
Amazing point there.
if I can just add to that, like, so let's use that example that you just built, moving money from country to country. That's
Yeah.
a solution, right? But some of the best businesses are the people who came to that and said, you know what, I as a founder, I had an issue. I had a problem moving, whether that was I was a student and I was trying to move money from one country to another, and it cost me thousands of dollars that I couldn't afford to have. Boom, you've got an Airwallex. I was trying to move money to families in need, or to a family in need in another part of the business. Boom, you have a Wise, a transfer Wise, right? Taking that one step further and focusing on the problem and the human element is going to even in fintech, which is financial, like that's why I was laughing when Shane said that. Like, obviously fintech, it's in the name, right? Like, we are financially and money driven, but money drives a variety of different things. There's a variety of different drivers behind that. And I think it's really important to ensure, like, what is the story behind that solution? And even something like moving money, remittance, which is the fancy financial word we use for all this, is such an important thing to so many people around the world for so many things. If you happen to be somebody who grew up in more developed grew up in a developing part of the world and has now moved to a developed part of the world, a small portion of your income may make a massive difference to your family back home. Well, we're still talking about remittance, but suddenly, like, we're really talking about people's hearts, minds, and what it is they're trying to do, and that makes a difference. Like what Nabi's talking about with Cover Hero, it's what Shane's been talking about with Yonder. It's that difference between the mission and the heart, and adding the finance piece behind it. So I just wanted to add to that, because we can get really cold in this industry if we just talk about solutions and money, but solutions and money are really important to so many people, and I think it's an important part of what drives the industry forward.
Amazing.
Can I add something to what Brian said? Because when I first started Cover Hero, I started because I personally experienced this really terrible insurance event with someone very close to me, got very sick, and we were both self-employed. And that was the first time we had to lodge insurance claims. And it was a horrible experience. Portals that were invented in the dinosaur age, that it was just so inconvenient, I gave up. So I remember having 5 to 10 different insurance policies with trying to lodge the claim, and just with a highlighter and a lawyer friend sitting down and highlighting, okay, what does this mean? This is so complicated. And been paying for, business insurance for 13 years and life insurance and key person insurance. It's kind of like a jungle. And as a self-employed person, we're so busy trying to, build the business. We still buy the insurance, but we don't know if it is right or wrong. So what we thought, as in our very naive, arrogant founder mentality, was we need to build a marketplace. We need to connect the marketplace. So the first product that we built was this like digital wallet that we thought we are going to connect to all the insurers across Australia. And we're going to build this like super sophisticated AI-powered recommendation engine and pull everything, run some NLP on top of it, and then push out a hyper-personalized product. I mean, it's brilliant in theory. It was impossible to execute, because what we didn't know, even though the consumer problem was so apparent to us, What we didn't know was, in order to make that happen, the supply chain of the insurance world need to be at a stage where we could tap into all of those things. And had no idea about, the legacy systems that was going to prevent it. So we built this like proposition. We went in accelerator program, and we wanted to connect it to the insurers. There was no way to connect it.
Mhm.
So we very quickly realized, okay, this is not going to work. So we built this product, and then we shelved that product. Then we were like, okay, we still need to make insurance simple to this target demographic. Instead of us going and looking for insurance, the insurance needs to come to us on the channels that we're working on.
Mhm.
So then we went back to the drawing board, and we were like, okay, what do we need to build? We built this like really cool solution that we can't really execute on because of the way the industry is set up, and we need the incumbents to move things to a more modern infrastructure for us to be able to interface with that.
Mhm.
And we're like, we don't want to do that. So then we were faced with this real hard problem of, do we give up on this problem to build something across the value chain? Or for me, it was like, I'm obsessed about making this happen. But
Mhm.
that meant we have to go and build full like end-to-end insurance infrastructure, which was not what I went into the market to do.
Mhm.
But it was, and then it became even a more ambitious, kind of endeavor. Needed more capital to execute on that.
Right.
So we had to have this like real honest conversation about, here's the problem that we are trying to solve, and the solution to really solve it is going to be more painful than what we thought. So then
Mhm.
it was like, do we give up and go do something else, or do I still care enough about the problem? Like, I'm hell bent on making this happen.
Mhm.
So then it took a lot longer because it's so complex to connect the supply chain of insurance from the regulators. There are multiple stakeholders, and then trying to build a product that could scale globally.
Mhm.
And to Air Wallets' example is really great. They built a platform that could scale globally. That means you need to own financial services licenses everywhere, and
Mhm.
you need to build this like, super complex, boring compliance module to
Mhm.
make the insurers happy and then the regulators happy. So what I thought was building this like super sexy lifestyle that turned out to be like a core insurance infrastructure that turned into B2B. And it was an interesting journey to just discover how much we didn't know
Mhm.
about the problem that we were trying to solve. And
Mhm.
if I knew when I started it
Mhm.
was going to be difficult, I would have gone and built a fashion startup, would
Mhm.
have been so much easier. But it was just so humbling because I spent like 9 months in Silicon Valley in an accelerator program, and we
Mhm.
spoke to about 100 insurers across the value chain, and then I got to understand their problems, why they can't execute it. So then we became obsessed about solving their problem, the customer's problem, the regulator's problem, and it's like multiple stakeholder problems
Mhm.
need to be solved for this one solution to work.
Mhm.
It's just like climbing up like a really crazy mountain that we were not prepared to do. It was I have a lot of trauma from like solving this problem.
Such an amazing story of how you really were passionate, and this is what probably sets apart founders that stand out in the eyes of the consumers, that they're really obsessed about the problem, and they really want to close that loop, not leave the consumer in the lurch at any stage, and close the loop from all stages, and and build a scale. And the challenge of building a scalable solution while doing that is certainly quite big one. And we can learn a lot from your story, Navi. And probably we're entering the last few stages of the conversation, and I have some questions on the board. Probably I'll request the audience to wait for just one more a round of discussion before we share them with the panelists. So probably the last section is about pricing, and many businesses, especially at the start, do not focus a lot on the pricing part or on the monetization part. And this, if not the immediate short term results which we talked about earlier, then at least making the plan for solving the unit economics, solving the operations, measuring the right metrics in terms of how they plan their commercials, and how they both internal and the consumer facing ones. So would love to hear your perspective as business leaders, and on how you went about planning your pricing models, your cost structures, and what are certain key points that the business leader should keep in mind, especially in the initial stages of the company. So probably we'll start with Shane on this one.
Yeah, look, I think that it comes back to the customer, right? And what the customer is willing to pay. Um, the customer's only going to pay for what they're getting value for. And look, at the same time, like we want to make money, and we want to obviously push out our premium offering, but and we were about to, and Conrad, who's one of our key members, who's on this call, is we realize that, hey, we don't have enough here that customers are actually going to care about to pay for, right? So we're like, okay, how do we build a couple of those features that they really want, so when we do get them, they're not going to tune out, right? And I think that's an important part to gauge from your customers. And again, if you've got a good community, you can turn to them and say, hey guys, like, this is what we're thinking. What are you thinking, right? Like, how would you feel about this? And the good thing is we've got a group of about 80 or so people that we turn to for feedback like this, right? But look, also the other thing is, we're living in an age where subscriptions is king now, right? Like, we're subscribing to everything, especially since COVID. We're subscribing to Netflix, Disney Plus, Stan, Kayo. How many other subscriptions have I got? Jesus. And someone actually bought me a Spotify subscription because they were sick and tired of me, not paying and getting ads every time, right? So like, we also get subscription fatigue, right? And there's going to be a point where there is, and there already is, subscription fatigue, right? And I was looking at this data, and basically data showed that customers are more willing to pay for subscriptions if they can cancel easily, right? So like, these are the considerations that you've got to have. Just got to make sure it's actually adding value to your customer's life, and also customers want flexibility, right? And I think it's an exciting time for customers because customer demands are growing quite quickly, and we're pushing the limits of innovation, and we're pushing, I guess, the banks and the other institutions to catch up or potentially disrupt them quite considerably. So the customers win at the end of the day, but you just got to make sure you create stuff that has value for the customers.
Amazing. Thanks for sharing that, and definitely a lot to learn from that. Next question to Brian probably would be again on the same point. How do you craft a win-win commercially, for the enterprise, for your customer and for your organization? Like, what are the key points again for a business leader to focus on?
Cool. So I'm going to pull directly from my kind of fund accelerator startup experience for this one. If people aren't familiar, there is kind of a built-in process that most enterprise customers are across. It's usually a proof of value to a proof of concept to a pilot. So many people think, oh, we're going to start with a pilot. Well, you actually have a few different things you want to prove with an enterprise customer before you move to that level. So roughly what that looks like is when you have a proof of value, what you're doing is you're building trust. You're showcasing, this is what we can do for $0 to no dollars. Maybe there's some hard cost built in. So using AWS as an example, maybe to run this test, you need to build up an AWS instance. So there's a small cost involved with that. But there shouldn't be you shouldn't be being paid for your time for this. You shouldn't be making any profit off of this. A proof of value is going to an enterprise customer and saying, we believe we can provide value to you. Here's the test that we're going to build out. Here's the experiment that we're going to build out. And so you build that out together, and you both say, okay, this is what's going to make a successful proof of value. It's a very small, no risk test that an enterprise can work together. That then moves to a proof of concept. A proof of concept, I think more people are familiar with. This is where you're doing a very, very small scale of what a potential pilot would look like. If a pilot's going to be 10,000 of the enterprise's customers, a proof of concept is 100 customer test. You're talking about like 1% of what a future pilot could be. So the costing from that perspective is you really want to only be charging for, again, what the experiment itself is going to cost, plus if your team is requiring certain time. So we're
Mhm.
talking about very limited profit, if any, off of this, and that's not really the driver. The core thing when you're working with an enterprise or a larger organization is you're building up trust, and everything you do is you do, this really small, it's all about building trust. There's no cost. Now there's a little bit of cost, but there's a little bit more trust built up, and then you move to a pilot. And I think everybody's familiar with a pilot. You're doing a small focus area amongst the larger enterprise. Usually the difference between a proof of value and proof of concept, you can work with their venture or their innovation groups. You can do it without having to go through procurement and without having to go through legal. Those different pieces. With a pilot, you start to move into, we're starting to talk about an actual commercial engagement at this point. So you're going to have to go through those different pieces. I think the really important thing that I see a lot of startups miss, and this is fintech exclusive as well, is they look to the partner, the enterprise partner, to drive that engagement. And that's a mistake.
Mhm.
You are the one who should be driving that engagement. You should be building out the roadmap. You should be saying, this is what success looks like. You should be getting sign off on what success looks like. You should be saying, if this happens, this gate opens and we move to the next piece. And that should be true for every single proof of value, proof of concept pilot that you have. So you're
Right.
really building out and driving that roadmap. Now, you're not doing it alone. You
Mhm.
can't make assumptions of what's going to be successful. You need to be working with the enterprise as a partner, but you need to be driving that engagement. And I think too many times, fintechs and startups as a whole look to the big company and say, oh, yeah, we want to do something with you. What do you want to do?
Mhm.
And then it's just you're sitting there and it's like, well, the enterprise has a million things going on. They're getting 50 just internal emails a day. They're getting, calendar invites thrown on their thing. You need to be showcasing, how am I going to provide value to you? What does a proof of concept look like? What does a pilot look like? And I will always come back to two things. One, you need to be driving that. And the second piece is, how are you answering the most important question? Are you going to make them money or are you going to save them money?
Mhm.
And if the answer to either of those questions is neither, rethink the prospect, rethink the experimentation process. But you as a founder need to be doing that. So it's a pretty tried and true process. Nabi was talking about accelerators. Most accelerators globally utilize that POC pilot process. It works very well. Most corporates and enterprises globally are across it.
Mhm.
I've done similar processes with Indian businesses and Australian businesses. So I would work off of a process like that.
Amazing. I think this really lays structure to an otherwise very complex problem that often organizations face at the start of the journey. And thanks for sharing these points, Brian. I'll quickly jump to Nabi on this one, to hear her thoughts on, because specifically for her, insurance business where she's directly dealing with consumers as well, how to approach the pricing structure here. And I'd also request her to, just to hear final thoughts on the overall theme of scaling revenue for a fintech business before we jump into Q&A.
Thanks. So for us, initially, we have to really like our pricing model was very complicated because we don't have access to the whole premium, right? So let's say we are selling, a yearly insurance, which is about $1,000. Our margin from that is about 200 to 250. The rest goes to the insurer, and there's like complex, structures built into it. So it's not like we can sell insurance for whatever amount that we want. So they give us a price, and then we have to make sure, how do we increase our margin? The way we increase our margin is reducing the cost structure internally, like cost to serve the customer, right? So that's the only leeway that we have. So in the insurance world, we had to go into like all of the ratios, right? Like combined ratio, expense ratio, and loss ratio. Loss ratio we can't touch. Expense ratio we can touch. Expense ratio of an insurer is extremely high. So if we, reduce the headcount, if we build super easy, acquisition channels, then that combined ratio, sorry, not combined ratio, the expense ratio goes down. Then we can reduce our price and make the price competitive. But then we still have to see, how much margin that we can make. So it was very hard to like be closer to the customer. Was really good. We can acquire customers. So we are making money for the insurer. So they like it. To Brian's point, are we saving them money or are we making money for them? So we were doing both. So our thinking was we're going to build something that is going to be super cost efficient from an insurer, from a product perspective. It's not, build something that will come and we'll monetize when we have a community. No, it was like sustainable, good unit economics by design. And our product has like an LTV of about 7 years, high value, low churn. Transaction volume is also bigger. It's not kind of like buying a phone and spending, $10 to insure the phone. We're protecting ourselves. So to get somebody to pay $2,000 to $3,000 in one go, that's a huge ask for consumers. When your cash flow is a major issue, right? So then we had to really think about, okay, our margin is this much, but at scale, this is a really great margin. But over time, it goes down because the first year, once we acquire the customer, because the LTV is really good, the product in itself is a really great product by design because it solves a key issue, right? So getting the pricing right was thinking through all of those challenges. And if it is too expensive and we have no leverage on changing that price, our hands are pretty tight. So we have to really focus on how do we build a product that gives us more room to move. So that's what we learned because it's not in our control. There was not a lot that we can do around the pricing, but we had to build trust with the insurers that over the long term there is an advantage that they would get because we are bringing a new cohort of customers that they initially don't have access to. So that's exciting for the insurer. They're getting access to data, which would help and facilitate in better and smarter underwriting in the future. So there was a lot of intrinsic value that is not on the table today, but future value that can be achieved. So we would like say, okay, here's the future value, how it would impact like from a startup valuation perspective, or future value that we can derive from these customers. And over 3 years or 5 years, we could restructure the capital or the capacity that powers it, and then maybe in year 5 we could double our margin, or in year 7 we could, because our expense ratios could be so much better. There are other ways of making other revenue channels, plugging in other products to that, but it doesn't double the acquisition cost. So it was quite complex even for us to wrap our head around because it's not such a straightforward industry, and that the place that we play in, it's a volume game, and we didn't want to go down the path of travel insurance or contents insurance because it's high churn and requires a really really high volume for us to sustain it. So those are the kind of like the thought process that went for it, and a lot of people pressured us in the early days, go and get the low hanging fruit, and I said that hanging fruit is going to churn a lot and it won't be sustainable. So we made a deliberate choice to choose a product that's difficult, that creates barriers of entry, but once it's there, there's a lot of long-term value to be derived from it, even though the time is longer. So very much a long game is what we play.
Amazing. So, thanks for sharing these points, Nabi. And again, like a lot of learning from all three panelists on how to go about planning the commercials. With this, I like to, we are almost at the top of the hour now. So we'll quickly, before starting to move to the Q&A, and I'll be handing over to Kartika. So quickly summarizing, the big learnings from the session, and we'll be happy to share, a summary of the session post this webinar as well to our audience members and the community members. Learning about how to choose the right channels, learning about what to do specifically at start of a business to engage more meaningful customers, the right customers for you, that is high priority for any business. And also talking about how to focus on consumer preferences, how to stand out in the eyes of the consumer, not to focus too much on the nuts and bolts and the nitty-gritties, but have a clear view of the larger problem and how the context of that problem changes over the period. So having that vision and clarity of that vision is really key for overall businesses. So I personally enjoyed a lot from this session, and I hope my community members did as well. Thanks again to the panelists, and I'll hand over to Kartika for the questions.
Thank you so much, Adi. Also, thank you so much to all our speakers as well. All right, so let's get to the question section. I will quickly put it up on the stage as well. Okay, so the first question is from Tej. They ask, how do you plan for running profitably in hand with sustainability? Incentivizing customers is temporary. How can we plan on facing the incentives out and run the business organically? Uh, would anyone like to take this up?
I can take this one also because I unfortunately had to run on the hour because I have to go grab a flight. So first of all, I want to thank the Lead Squared team. I want to thank Shane and Nabby as well for being on the panel. Like, it's always great to hear from these guys, and I hope people got good value. I'm assuming that here sustainability just means because there's two definitions of that. It could be sustainability around UN Sustainable Development Goals and creating sustainability from longer term. But I think here this means just sustainable business and creating a post revenue business as early as you can. So what we typically see in the fintech space, I'm going to use that last one. By the way, if anybody wants to connect afterwards, hit me up on LinkedIn. And if I'm answering this question wrong, apologies. But if it's that last one, which is what I think it is, generally speaking, the best practices around that are to tie in a bunch of pieces we've talked about here. You want to fall in love with a problem. Once you fall in love with that problem, you want to experiment. You want to experiment with different types of consumers, different types of customers, different types of product suites, which I think Nabby and Shane have explained really, really well in their answers. Once you start to figure out the different model that works and you start to get that problem solution fit, that initial portion of the business that really makes sense, then you start to go out to the market and really test out, does the product that has made the most sense during those initial stages work into what we call the product market fit? The product market fit is where you're actually going out to the market, you're selling into the market, and you're seeing what makes sense. Now, this question is really important because what I said at the beginning, that shift between a growth model versus a unit economic model, that's what this question is getting at, is exactly what VCs, investors, angel investors, corporate partners are looking for, which is a move towards profitability and revenue. So what you want to be looking for is, as you're doing all these experiments and tests, what are the models, what are the opportunities, and what are the engagements that are going to drive the most revenue in the least amount of time? Nabby did a good example of explaining a bit of this around InsurTech. My last business was an InsurTech. It failed miserably because InsurTech, as Nabby said, had very tough margins, right? So in the case of what we did, I'll use my example. We were trying to build a home content insurance offering, and we thought we had a really strong offering. We had priced it really well. We'd focused on it really well. And where it fell apart was outside of our control. We picked a bad partner when it came to underwriting. And our underwriting partner, Nabby's nodding her head, knowing exactly where I'm going, but our underwriting partner was very comfortable as long as our reinsurer was taking on 100% of the risk, which they were happy to. Right up until the very end, when they asked if the underwriter could take on 5% of the risk, suddenly we don't have a business anymore. So we were focused, using that model, we were focused on the model that was going to be the most successful and drive the most revenue, and everything looked like it was going to go well. But the reason I tell that story is, know that there are things outside of your control. You can do everything right, and it can still fall apart. So just to come back to the question and finish up my point here. You want to be running experiments to fall in love with a problem. Once you fall in love with the problem, run experiments to find who your like-minded audience is. Once you find your like-minded audience, then you use that audience to build a product market fit. Once you have product market fit, you want to drive towards where you can drive the most revenue in the most sustainable way possible. That's unit economics at its absolute core. So once you have that, you should be only testing out new pieces so that you can drive. Because the truth is, in the current market, and this is an absolute prediction, so someone can yell at me later, but in the current market, we're probably looking at 2 or 3 years where being able to be a bootstrapped business and running off of your own revenue is going to be even more important than the amount of users that you have. So with all that being said, that's the rough way of going about it. I hope that helps. I got to jump off, but thank you, everybody, and just reach out to me on LinkedIn. It's always good to see everybody. Bye.
Thanks.
Thank you
Thanks,
so
Brian.
much for joining us, Brian. Hope you have a safe flight. Bye-bye. All right. Can we just quickly get to the next question? Nabby and Shane, if that's okay with you, because we have 2 more minutes. That's all. All right. Then I'll just quickly get the next question onto the stage as well. It's from Ian. Ian asks, is driving engagement through frequent monetary incentives for short-term user acquisition boosts a trap most fintech companies maybe fall into, which may be also which may also be overshadowing better strategies like marketing core value propositions. I know that by reading it, I probably messed it up a lot, but
No,
it's
no.
on the.
Look, I'm happy to take this one. Look, I think monetization for the short term is great, right? But I think Nabi and Brian have both alluded to building sustainable models and making sure the unit economic works. If you have to incentivize each customer quite heavily, they're not going to be loyal customers, right? At the end of the day, you want loyal customers. Um, look, a simple answer, just conscious of time, is I wouldn't focus on incentives. I would focus on having solving for a problem that someone generally has and is happy to pay for it.
Thank you so much for the answer, Shane. Nabi, would you like to add something to it?
I would echo exactly what Shane said. Is if you incentivize, somebody, they're going to churn. They're just coming for that, that incentive. So going back to the drawing board and really thinking through the product design, like is the product that you've designed solving this core problem that the customer wants? Because if they want, let's say on a Friday night you go to have Friday beers with your friends, you want a beer, you're gonna buy that beer no matter what, right? Because you want a beer. So if you use that mentality in your product design, because there's like strong, problem solution fit. So they're like, then there's all of the bells and whistles of all the craft beers or all of these other little things that don't matter. But the problem solution is there. So when you're in fintech, it is just really understanding what is the core problem. Is it a convenience problem? Is it a price problem? Is it a reach? Is it like better or a user experience? Or the other things that are not so apparent is wanting to be part of a tribe, right? So when you have two products that solves the same problem, one product wins, the other product doesn't, is being matched to that specific audience and being really like clear in the market, like it's going after niche segments and just really resonating with the drivers, the value drivers for the end user to buy the product, right? And that's all to do with what the brand represents, what you stand for. And this is also one method of, you don't have to give discounts, but then you connect to the heart and soul of that particular segment, whatever that segment is. And that's a really sustainable long-term way of doing it. Fashion industry and retail does this really, really well.
Thank you so much again, Nabi. I see that there's another question, but keeping the time in mind, I think we can wrap the session up as well. So, if you have any more questions to the audience as well, as mentioned before by Brian, you can reach out to us over LinkedIn or email us. We'll be very happy to take them up when time goes. But for now, I think we've come to the end of the session. It was absolutely wonderful to host all of you here, Nabi, Shane, Adi, you did a great job as well. Really, really happy, and I'm really looking forward to more sessions like this in the future if we can again get your time, maybe. Yeah, so with that, I think we've come to the end of the session. I hope everyone enjoyed it. I certainly did. So thank you so much again to our wonderful, wonderful speakers. Thank you to the audience as well. All right. So bye everyone. Bye for now, everyone. I hope everyone has a wonderful rest of the day. Thank you so much.
Thank you.
Cheers.
Thanks, guys.
Thank
Good night.
you.